Hello, live team. Welcome to the Coach's Playbook for June 22nd, 2021. I'm still recovering from a little malady I had yesterday. I'm in that zone where I feel fine, but there's nothing in the world that appeals to me edible. So that sucks. But anyway, other good things are going on. That's the opposite of a trader shout out. That's something bad that's befallen a trader. Mick, you got a trader shout out to start us off before we start talking crude oil?
I do. Big shout out to Stephen Mastuzzi, up about $2,500 today, trading the NASDAQ. And he's been on a tear all along. He's grown this account pretty nicely. So shout out to you, Stephen. Keep up the good work.
Nice.
That's awesome.
We're proud of him, even if it's not as on brand for his video. I was kind of hoping it'd be crude oil futures they made the money on. That being said, today we are talking about the incredibly SEO rich title Dan has told me of day trading oil futures for beginners. Were we not able to throw in like hashtag, I don't know, stop the steal or something to make it? Anyway, so we'll be talking about that today. And part of the reason I wanted to talk about oil as a topic today is, Dan, if you want to share that chart at some point.
Absolutely. Here we go.
Yep. Oh,
definitely been an interesting market.
Sort of interesting in some ways. It is a lack of interest. And as we look at that big drop off, it's so similar to kind of stocks in a way. That big drop off is the coronavirus, which I'm sure you've all heard of by now.
Yep.
And then this resurgent has been that is an incredible trend right there.
Well, let's just do a quick walkthrough. And so we all have like kind of a picture or an idea of what this market's been doing. Yeah, so you come back into last April. This is an active chart, as you can see here. So this is the overlay of the charts. It's not one specific contract. So we got an active chart.
Daily chart.
Yes, active daily chart. So we dipped way back in April. And since April, we're on a 14-month trend to the upside, which is just incredible. Few small pullbacks, I guess you could say. But for the most part, since November, we have been on a very strong trend to the upside.
Indeed. Well, I just wanted to show that chart so we can all get on the same page here. So we're talking crude oil for beginners. Everybody knows they interact with oil in their everyday life, usually in terms of gas prices, things like that. There's supply and demand numbers. It's a very economic, shall we say, contract. Right now, we're going through a period of increasing demand. We're burned through the supply from over the pandemic. Why don't we start with Mick, if you want to talk a little bit, because I think you've spent some time in there, and we can start with like the absolute basics of like what does a futures contract look like for oil?
Sure. Happy to walk you through that. I did spend a lot of time in my early days of trading, participating in the crude oil market. I started trading in 2008, I think, when oil was on its run up to $145 per barrel, to the fall back down much lower. We're trading at about 73 and a quarter right now. I think crude oil it's a nice market that provides opportunities like a lot of other markets. It's an extremely deep and liquid market. For beginners out there who are trading, they also do have a mini crude oil contract, which is not as deep or as liquid. But, I think anytime someone's starting, it's good to trade with as little leverage as possible, get your footing, and then you can graduate to, the regular contract size or increase leverage. But, a crude oil futures contract, one contract is equal to 1,000 barrels of crude oil. So, as a trader, if you purchase one crude oil contract at 73 and a quarter a barrel, you're literally trading $73,000, a little over $73,000 worth of crude oil product. So, that's kind of an explanation of the leverage here that we have with futures.
Yeah.
With how much you can trade with how little margin you actually have to post.
And in case you're curious or just hear the vocab going around, there's two at the CME. We're trading WTI crude, which is delivered to Cushing, Oklahoma. You may hear people talk about Brent crude. that's delivered off the coast of Scotland. It's just a different contract with different delivery specs. It's still, I presume, I've never traded Brent, but it's probably still 1,000 barrels. It's just there'll be small differences between the contracts based on, the logistics of getting it from, say, off the coast of Scotland versus down in Oklahoma.
Correct. Yes, it is a physically delivered product, not a financially settled product. So there is the risk of making or taking delivery, but usually for people who are new to the business, trading small, your clearing firm or your brokerage firm is going to get their foot in the way if you come too close to the expiration of that contract.
Yeah,
I think I've told that
so.
story about the guy I worked with at one point that forgot he had some on and got the phone call of where he wants to take his delivery right before expiration.
Yeah, that's the kind of call I think you just new phone who dis. Don't do that. But
yeah, that's a jaw to the floor moment there.
Right.
Yes. As you might have seen last year when the oil contracts went negative, that wasn't on the run. That was just shenanigans that happened in the days before expiration of the contract.
I remember that day very well. We, the four of us, among some other people, definitely were huddling up talking about that. I was coming into the May contract expiration.
It was one of the best futures moves I've ever seen. It was just people were just talking about a jaw on the floor moment when it's going negative $40 a barrel.
It's a lot to process. It's something you've never seen, and all of a sudden it's negative, but you're trying to understand the logistics around getting paid to take a product that you can then sell. Like the logistics around that whole concept there was just truly unbelievable.
And one thing I want to add about that contract going negative prices is, since this segment we're doing today is titled Trading Crude Oil for Beginners, or some variant of that. I know there were a lot of people in the world out there that thought that commodity prices couldn't go below zero. Well, for you beginners out there, and they certainly can. And it's something that, John, you've been a veteran of the markets for a long time. I believe I remember you saying that you had not seen a product go negative in the past, but now we all know it can happen.
Yeah. When they say it can't go to zero, don't believe them. It can go below.
Yeah, I was thinking we throw it over to Hope. So it's one of your featured markets you do each week for the kickoff. I was thinking maybe you could just tell us a little bit of your thoughts on trading oil and how it might differ from other things. But one last thing I want to say, we're talking about as a beginner, I'd say with any futures contract, trade the on the run contract always. Don't put yourself in a position where I'd say an advanced maneuver is doing anything outside of whatever the most liquid contract is. Smart long-term capital management essentially imploded, and they had like Nobel prizes, and that's kind of what they were doing. So, Hogue, take it away. I just needed that aside.
All right. Yeah, you're definitely right. You should be trading the most liquid in the current front month. Now, crude oil rolls over every month. Every month there's a new front month. So it's one of the products that is a little more difficult to trade if you're looking for information from volume and open interest. Volume obviously is the total number of contracts that trade during a given day. The open interest, however, is the total number of contracts outstanding. And crude oil is a very deep market. There is tons of interest in, even all the way as far out as the December 2025 contract has like 10 or 20,000 in open interest. So it's one of the caveats to trading crude oil is you're going to have to be really cognizant of when rollover and when expiration is. Otherwise, you're going to end up trading a contract that is illiquid, or even worse, expiring. And, you're going to end up trying to pick up your 1,000 barrels of crude oil down in Cushing, Oklahoma.
John, I don't want to cut you off. I want to add one thing. I know it's so much easier to track the volume in these products and be aware of the rollover if you're trading on the dome or the price ladder, the matrix, whatever you want to call it, where you're actually seeing the bids and offers as opposed to trading on a chart. Many people get blindsided by the contract roller because their charts don't display, volume traded for the day. So it's always good to reference your dome to make sure that you're still trading the most liquid market.
I mean, when I was trading at a firm, and I presume this is the same with everyone else here, is you weren't allowed to trade on charts. It just wasn't something that was done because you should. When it comes to the actual execution of a trade, you should be looking at the dome because that's where you're going to get the reading of the order flow is really what you want to be doing.
Mhm.
So I would discourage people just from blindly. There's no context if you're just hitting some level on the chart and having it execute. So
I
Glad
think
you mentioned that.
the only time I'd ever make any sort of thing with trading on the chart is just saying, hey, I'm going to bring my stop to a different location just based off the visuals of the charting here. Like that's the most I'd ever actually think about doing. Trying to get into a trade by just looking at your chart. No one can. Go to the dome.
Yeah, our charts weren't even connected to the trading box; they were on the internet box. So
we had them all on the same.
Yeah, so our computers when we were trading were only on those computers. They only had one application, and it was to run the software we used, and that was it. And it was just dome ladders and auto spreaders and all that good fun.
Mhm.
So with that aside, back to the oil stuff.
Sorry, I opened up a can of worms there, John.
It's okay. It's okay.
These are all good tips for people beginning to trade futures too.
Yeah, you're absolutely right.
Works.
There's information in the domes. If you're trading off your charts, you're missing part of the picture. And some domes don't even have the total volume on the dome. So every platform has a quote board, and you can put the quote board up, and you can, have the next couple of months of crude oil or whatever you're trading up to see when the volume starts to roll into the next month. It seems to be a bigger issue in crude oil because it does roll every month. And if you watch the forecast or the recap or check the weekly kickoff level, we're going to be letting you know when that's going to happen. So you get a little bit of help from us in that regard. The fact that it is not cash settled, that it is an actual deliverable product does change things a little bit. We just saw the expiration in the S&Ps, and close to 500,000 contracts expired, and they're gonna just settle in cash wherever your position is. If you're long below the settlement price, you're going to make that money. If you're long above it, you're going to lose that money. There's no delivering of all those stocks. So that's one of the things, like in grains, all the deliverables, it's something you want to keep track of. As far as basics of crude oil, it is such a demand versus supply market. I mean, you're keeping track of the petroleum status report by the EIA. You're keeping track of the number of rigs that are out there on the ocean. You're keeping track of, there's a lot to kind of keep track of course. And now you've got OPEC, you've got things going on possibly with Iran. There's all different kinds of fundamental information, and it's sometimes going to be helpful, but most important is just to be able to trade what you see, get a strategy, get a simple chart, and start learning how to trade it in a very simple, small way.
Yeah, because there's some serious hedging that goes on in that market. You're talking about going out to 2025. Every company, every government, like from Amazon to, I assume, the U.S. military and everyone else, everybody, airlines are a huge hedger there.
Mm-hmm.
It touches every business. So there's a lot of activity and there's a lot of opportunities from those activities. But, like Hogue mentioned with the cash settled indices futures, realize it's going to be hard to make money because, like Hogue said, there's only one thing that happens at the end of one of those futures. Someone was short, someone was long, and money goes directly from one to the other, right?
Mm-hmm.
There's a winner and loser, and it's that simple to every trade. So it's not, people look at the success rates for trading futures, and it makes sense when you look at it through that light. It's hard, man. It's super hard. But I don't know. I find it rewarding, but maybe I'm just a masochist. So, Dan, you had some research for us.
Yeah, so I just kind of took a few minutes to take a look and pull some data on what's going on in crude oil because, as we showed there in the very beginning, 14-month trend right now. This market is moving higher. It's very, very directional. We all know trend is our friend. You want to get in if the market's moving higher, you want to find those pullbacks and just kind of go with the trend. So a couple of things to start to pay attention to. Like I said, 14-month trend up. We have demand up and supply is down, right? API over the last 3 months have all been draws. We have not had an increase in the API, American Petroleum Institute. So that's something to start to pay attention to. Are they going to continue these draws? Well, the last draw was expected to be about 3 million barrels, was almost 9 million barrels. It's going to continue to send price higher. 32 months it's been since we were at these levels. Right now we're trading about 73. I think, Mick, you were saying 73 quarters, about right where we are right now. That next stop is going to be $75. That's that last high about 32 months ago, 33 months ago. If we get through that 75, when you start to look where these markets have been trading, between $75 and $93 is a straight shot stretch of a few weeks of just downtrend, no levels of it holding, straight downtrend. We're going to, excuse me, when I say a few months, I mean a few years. We're moving back into prices we haven't seen since 2014. So a lot of things to start paying attention to when it comes to crude oil. I'm going to sit here and I'm going to take a hot take and say, if we get up above 75, there's a lot of room to the upside, and $5 a gallon might be something we're seeing once again. I do remember 2014, I had a truck that had a 36-gallon gas tank, and I was getting about 6 miles to the gallon. I rode my motorcycle everywhere we went. Didn't matter, rain, snow, shine. Didn't matter. I even rode it through a hurricane one time because I was not driving the truck when gas was that expensive.
That is commitment to gas prices right there.
One thing, talking about the gas prices that you were mentioning now, I don't know. I would imagine that this is still pretty darn accurate as far as the price, but I know when I was trading crude oil earlier on in my career, and we were on that climb up to the $145 a barrel, they were saying that with crude oil above $70 a barrel, that is when you see new entrants come into the market to produce. That's the price point where they get their margins, and you'll see new entrants. And below that, you won't have new entrants.
That's something that has kept, and correct me if I'm wrong, I am, not a writer for The Economist or something, but like, I believe that that's a large reason too we haven't seen price action back up above $100 like it was back in 2008, because now anytime we get to 70, they turn on the shale reserves or whatever in the United States. Very simplified version of what happens, but basically, like all products, the higher the price gets, the more attractive it is for people to sell. Now with oil, it's a little bit complicated because there are, there's some significant barriers to entry in that industry, right? I mean,
like striking oil.
Yeah. Well, the research, the fixed costs you got to do to find that stuff. It's not like I could be like, hey, I'm leaving Topstep tomorrow to go start a oil discovery corporation with my buddy.
Just
be
get
like,
your two metal rods and you just walk through the
like
fields until
rods.
they cross.
Yep. Then you dig. Yeah. I learned that from Daniel Day-Lewis.
Well, there's also, anytime it gets up above around $70, you got a whole world of producers out there that are going to try and clean up on some of that profit. We've got OPEC talking about increasing production in within the next couple of months. That's certainly going to create some downward pressure. We have a possible, it seems to have slowed down, but a possible agreement with Iran to allow them to bring 2 million barrels a day back into the world market. So while demand has been increasing, price has been increasing, there's always ways or levers that they can change that dynamic and put a cap on price. Nobody knows exactly what's going to happen. And so that's what makes this so fascinating, and again, like Jack said, so difficult, is for every reason you can say price is going to $150, there's a reason you can say it's going back down to $50.
Right. It's John, you
I
kind of
support the latter.
Yeah. You kind of spoke there to, it's a very geopolitically sensitive, because I'm sure this isn't a surprise to anyone here. Oil is very sensitive because a lot of the reserves in the world come from regions that, maybe we're not the best of buddies with, and even our buddies there, really not the best of buddies with them either. And there's all sorts of, think about, remember, I think it was just right before Corona got erased. It's a market that can move violently, especially if you're holding positions. I wouldn't want to hold unhedged positions in it over the weekend because was it in February or when was it when there was that like retail drone attack from
in Saudi Arabia.
That's right.
Like,
that's right.
So
yeah, there was
no
a big gap that evening, $6 gap or something, $6.40 gap.
While no one knows where these things are going, unfortunately, there are some actors that can know more than others in the right scenarios. I don't want to say anything that's gonna get me dubbed like into conspiracy thing, but let's just say I think that Iran was probably on the right side of that trade.
We know what you mean.
Yeah. Anyway, well, I'm trying to think if there's anything else we'd want to give someone who's just getting started in that besides.
Yeah, I wanted to add one thing too. For everyone out there, Jack was kind of mentioning a little bit ago. I had it in my head, but I didn't want to jump in. So then I forgot it when I started talking. I remembered now.
Hate it when that happens.
When we were talking about how many people are getting in and hedging positions, right? We were talking about airlines doing this. The gas companies and the oil companies are still hedging their positions, right? One of the largest oil trading firms in the world is BP. They're a massive company that has a massive trade desk trading and hedging their inventory. So every single person, even as markets are moving higher, the producers are still trying to hedge their position. So this is a very popular market. Yeah.
What I do like about that is I like things that make economic sense to me. And that is where some of the opportunity comes from trading oil. Because in the case of the producers, they're making all this oil. They want to sell it in advance in futures so they can lock it in. And even if they end up on the wrong side of that trade, they've gained economic value from making that trade. So if those are the sorts of deals where you could probably find a strategy that kind of works for that, or sort of like a mutual beneficial futures market like relationship. Now, granted, I don't do a ton of it, but that's why there's such a robust oil trading environment.
It runs everything.
It does.
Speaking of the hedging operations, and again, this being titled, trading crude oil for beginners, I just want to mention, all of these futures markets are here for producers and users to hedge the product that they're doing business with.
Except the S&P 500, the indices. Yeah, absolutely. Especially
good point, Mick. Very good point.
Absolutely. Well, does anyone have any final thoughts here before we move on to a quote?
Well, I got a quote.
Let's play the Jeopardy music.
I like this one. We all want to get into this industry, right? So John Paul Getty, I don't know how to say it. My formula for success: rise early, work late, and strike oil. So let's get up early, work late, and go find that
strike
oil.
Yeah, you know what another key to his success was, as far as pinch pennies too. Famously, Getty in his mansion in, I don't know if it was in Italy or France or whatever, had payphones. So if you wanted to make a phone call there, you had to use the payphone.
I kind of like that. That's kind of fun.
I suppose. There was some.
Who knows? Maybe someone here will be the next Beverly Hillbilly that strikes oil and gets to move into Beverly Hills.
Who do you got? I feel like that's got to be you, Dan. Right?
I'm gonna try and find a place to put a quarter into my cell phone.
That's why you haven't been answering my calls. Yeah. All right, everybody. Well, thanks for stopping by. We have an article on the blog. If you look up Beginner's Guide to Crude Oil, that will go into the actual numbers and things like that. I recall writing that a while ago. So that's there. Otherwise, hope you're doing well this week. Things are kind of frothy in a few stocks. We're still in that holding pattern a little bit. We had a drop Friday and a rip yesterday. Things are getting exciting again. So I'm looking forward to the next couple of months, and hope you all do the best out there. Ho, likewise. You want to send us away?
Yeah, sure. Be careful. Crude oil is a slippery market, if you will. Just be careful, trade well, protect yourself.
Very slippery.
Yeah, the most liquid of liquid markets. We'll see you guys next week. See you then.
Take care.